Ladies and gentlemen, welcome back to the channel. And even though you're getting bad news out of the UK today, AMC stock is in the green. Big tech, for the most part, is in deep red territory. Netflix down 3%, Tesla down almost 2%. The list goes on and on. It's a pretty rough day overall. And there's a reason for that, and it comes down to the bonds. Now, you also had Netflix earnings last night in after hours, and that was really not good. And that's setting kind of a bad precedent for a lot of your technology companies heading into earnings because expectations are already low. If companies are missing on already lowered expectations, then it's really, really bad. Right. So we're going to get into everything happening today in the marketplace so far, as well as with AMC stock. And trust me, you guys don't want to miss this. So let's get into it. Hit the like button and subscribe to the channel. Source your comments, questions, or concerns down below in the comment section. And if you guys want to come trade with me live in real time, link down below in the description of this video. Looking to make a Tesla earnings trade before the end of the day because Tesla reports earnings in after hours, and wow, Tesla, oh my gosh, either they're throwing their pricing power in our faces or their demand is a lot weaker than what they were hoping for. Keep in mind, we already got the delivery numbers, but Tesla just this morning, or you could call it late last night, lowered prices again on their Model Y and Model S, I believe. So either they're holding their margins up and just trying to get better demand, or they're sacrificing margins to get that higher demand. That's going to be the big thing that investors really care about, is how are those margins at Tesla. Now, if Tesla is not good, that could send the broad markets down quite a bit. And how does that affect AMC? Well, what we've seen recently, you can even see it on a smaller scale today. When the S&P 500 is down, or when just overall technology stocks are down, AMC tends to rise. S&P 500 down about 0.2% right now. AMC up 0.37%. It's not really like what we've seen in 2022, where if the markets went down, AMC would go down. You've been seeing this opposite correlation, AMC even popping up 0.5% now. You can kind of see this as the markets go down. AMC has been rising, and if you pay attention to it, I think it's pretty telling on the collateral front, because collateral is really getting squeezed every time these stocks fall, and that can just show you how over leveraged some of these shorts are in their short positions in AMC. Nonetheless, let's get into the breaking news here on the day, and it's the UK. The inflation rate again comes in at 10.1% as food prices are rising at the fastest rate in 45 years. Now, why is this important? Well, so far in earnings season here in America, and more broadly, earnings have been okay. Now, the whole reason why stocks have rallied in 2023 so far is because people think this Fed rate cut is coming, a couple of them, by the end of the year, whereas at the same time, core inflation just reaccelerated. 1 year inflation expectations just jumped at the fastest pace that you have seen in a very long time, and both of those things happened last week. Now you're getting the UK's inflation rate reaccelerating again, and especially in food. So these things happening does not support the Fed giving us rate cuts. In a weird way, if earnings or the banking crisis continued to get worse, that might be a positive thing for the notion and this narrative of Fed rate cuts. That's not happening. You're not seeing that. So I do think that is helping to squeeze some of that collateral, again, in those AMC short positions. But this was overall not good news. Now mix that in with Netflix having some pretty poor earnings, giving you some pretty bad guidance last night on the margin for next quarter, loose subscriber guidance, which really wasn't good. They said pretty much in line with Q1 estimates. It should have been higher. Not good. And they missed overall on subscriber growth. 1.75 million added subscribers compared to 2.4 million Wall Street was expecting. So it's showing growth is really slowing down. Now, With Tesla specifically here in after hours, margins will be key. Now, it's not just Tesla that reports in after hours. You have IBM, Alcoa, Lam Research, Zions Bank Corporation, and Discover. These companies will also be very important, specifically Discover, IBM, and Tesla. And IBM, not as much, but Tesla and Discover especially, because this is going to be to the heart and soul of consumers. I mean, vehicles. How many people are still going out and purchasing vehicles? Keep in mind, we already have the delivery numbers, so it will be important to hear the commentary on how is demand. Last time Tesla stock ripped after earnings, it was because they had 2 orders for every 1 car they could produce. Or Elon said almost 2 orders for every 1 car that they could produce. How is that demand holding up now that you're through Q1? How is the demand so far in Q2? Do they lower guidance? How are their margins since they've dropped prices like 6 times since the start of 2023? If margins are good, Tesla stock goes higher. Margins are bad, you could see a pretty big drop here. So that's why I think it's pretty important. Discover, obviously, the state of the consumer. Are they still going out and spending money? And all of these things have a circle round effect to AMC. Like I said, as the markets do go down, AMC stock has been rising. On some of the worst days you've seen in 2023 so far in the broad markets have been some of AMC's best days in 2023. And we can go ahead and pull that up briefly for you guys. Let's take a look at some of the best days in 2023 for AMC stock so far. And it looks like this is going to be one. February 27th, AMC was up 23%. Let's go to February 27th on the S&P 500. And let's see how that matches up. You were actually up 1/3% that day. So maybe not the best example, but still AMC well outperformed. On March 28th, you were up 13%. And if you go to March 28th on the S&P was actually down about 1/4% on that strong day. So you guys can kind of see AMC's outperforming on the good days, and they're not falling as much on the bad days, and again, outperforming on the bad days in the markets. And that's why I think this could be very important for not only the markets as a whole, but with AMC as well. So there is that. Now let's go ahead and get into some of the Ortex data so far, and let me tell you, the option activity is not good. So far you have seen 5 orders totaling $675,000 positive order value of 0%. The short interest currently sitting at 26.5%, 136.63 million shares that are currently sold short. Cost to borrow average of 336.78%, cost to borrow max 363.84%, and cost to borrow minimum at 219.12%. If you look at Interactive Brokers, cost to borrow rates still are excess of 200%, about 100,000 shares that are currently available to be lent out. Now, again, I'll tell you this, just based off the numbers here, a lot of these shorts took out short positions when the cost bar rate was, 4, 5, 6, 7, 800%. Just the math on that alone, say you shorted $100 million at the start of the year, and you paid 500% cost bar rates, that's going to cost you $500 million in 1 year. That means if the ape conversion trade will only yield you about 125, 150%, best case scenario, you have about 2.5 months to be short on AMC before you would lose automatically on the trade based off of those high cost to borrow rates. And I think that is why the higher these rates stay, and really after April 27th, when things open up for commenting and after nothing really happens, you're probably going to see some shorts rush to get out of their short positions if you don't see that big downside reaction that everyone is betting is going to happen. Now, how do we know everyone's betting that's going to happen? Well, if you take a look at the expiration for next week, the calls open interest sitting at about 25%, puts at 75%. So you're seeing a stupid amount of put activity compared to calls. This was less than 10% last Monday. And we've been watching this, and every day AMC is green, you tend to see this call open interest number go higher. But it was very, very negative And you've seen some people change their opinions, but overall, still one of the worst option expirations as far as the call open interest number that you've seen in a very long time. Even this Friday is 36% calls and 64.3% puts, which is big considering the option activity that you are seeing for this Friday. Currently, go ahead and refresh this. Currently about 63,000 calls in the money, 418,000 calls out the money, 211,000 puts in the money, and 656,000 puts that are out of the money. This could most certainly lead to a gamma squeeze, especially if some of these earnings are bad in after hours and you do get that inverse reaction from AMC that we have noticed lately. It would not surprise me to see a lot of calls go into the money and a lot of these puts, this 211,000 puts, go out of the money. Both of those, calls going into the money, puts going out of the money, constitutes buying pressure from market makers and from anyone that has the back ends of these options. And that would be very bullish for AMC's share price. Now, it would not surprise me if even by the end of the week, you did see some news or some kind of announcement about this court date. A lot of people think the court date is actually canceled for April 27th, and that's not true. If you see AMC stock start to, rally a lot or drop a lot, then you'll know it's either, some new information came out, but you have not seen that yet. And trust me, if that were to happen, it's very likely AMC stock would rally 20 to 30, 40, 50% upon that news. So, we'll see what happens. There's a pretty big potential here for a gamma squeeze, like I said, especially if markets do kind of discorrelate from what we have witnessed in 2022. And that's what we've seen so far in 2023. AMC is tending to outperform. Now, if you take a look at some of the economic data still to come out today, you are going to get, I believe it's the Fed Beige Book that comes out later. Is that today? I swear it was today. Yeah, Fed Beige Book that comes out, at 2 p.m. This is going to be basically a breakdown of each district, how the economy is doing in their district. Think Boston Fed, think Atlanta Fed, think San Francisco Fed, think Illinois Fed, think Minnesota Fed, right? All these different Fed members are going to give a breakdown on kind of what's going on in the district, can give you some moves, because after all, I mean, people are not as fearful about that recession today. They're more fearful about inflation, and you can see this even in the bond yields. Bond yields are skyrocketing today. 10-year Treasury up about 6 basis points. 2-year Treasury up even more than that. So it's a pretty big day for bonds, and that's probably not going to be a good thing for technology. So there you have that. As far as the actual chart on AMC, again, you need to get up to and test and break out above the 50 and 100-day moving averages. Until then, I don't really expect a huge drop or a huge rally until you can break those. It can happen pretty big in a single day, like you seen back here on what was this, March 14th, before obviously we know what happened next. So on a technical basis, you want to watch that 450 level if any bad news comes out, or you want to watch these moving averages to see if we can break out above that. AMC, at the time of recording this video, to end off this video, up about 0.5%. So, ladies and gentlemen, that is going to do it for this video. Hit that like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. Thank you guys for watching, and I will see you in the next one.